Hi there, welcome to Kneppy Invest and welcome to January 24, 2025, the final trading day of the week. And we do have a long weekend coming up because of the Australia Day public holiday. Australia Day falls on Sunday and public holiday the next day. I actually do work on Monday night, so I am not complaining about that because we do get public holiday pay rates whenever we work public holidays. That's the benefits of working for a 24/7 organization because someone has to work when everyone else doesn't want to work. Anyway, okay day on the markets today. About 1 hour and 30 minutes left of trading. Most things are in the green apart from resources, which has seen a slightly negative day. This is not a surprise. Dow Jones was up 0.9%. NASDAQ up about 0.2%. Although tech's had the best day, which again is weird. So Dow Jones had a better day than tech, which probably should imply that non-tech companies on the ASX should have had a better day than tech companies, but sometimes that's not how it works. Okay, the agenda for today's video, we'll go through, as I always do, the best and worst performing sectors, indices, and also companies. Top 5 stocks of the day. Now, the stock coming in number 1 was not hard to decide upon. It was really obvious when I saw the announcement, released fairly early because it is a New Zealand-based company. The chart for this company has been basing, going sideways for maybe a year. And I remember thinking to myself quite a few months ago, if this breaks out, this would be a good trade. And I had a price, 44 cents. When I saw the announcement, I put a bid in at 44 cents. And I believe the share price of this company is around 44 cents as we speak. So that's an important level for this company. And that company is Synlait Milk. The other 4 companies have released trading updates. Yes, all 4 companies, the other 4 companies have released trading updates. So no Appendix 4Cs or 5Bs. I was thinking of including BSA or Somnomed. They just missed out. So not a lot of announcements today, which is to be expected because it is Friday, and Fridays do tend to be a little bit more quiet. So we go through the top 5, and then we'll answer some of your questions or comments. Well, I won't answer your comments. I'll just reply to some of your comments. And I haven't recorded the stock of the day, which is Synlait Milk, but I'll probably do that after this particular video. Okay, so let's have a look at the ASX today. We already know an okay day, pretty good day, except for mining. And if we have a look at what happened today, looks like the tech had a peak about 10:40 a.m. And really, since about 10:40 a.m., all the indices have really gone sideways. So nothing really driving our indices up or down today. So nothing really happening in Asia, I'd assume. Although Japan inflation rate highest in near 2 years. Now, if that was highest in 20 years, that would impress me. Or maybe what's the opposite of impress, whatever that is. And nothing else much here. Although China stocks climb as Beijing ramps up support. Japan manufacturing shrinks the most in 10 months. And Australian manufacturing PMI at 1-year high in January. I didn't realize we have come out of January yet. Okay, that's talking about December, not really January. 49.8, we're looking at 50 there. So above 50 is expansion, below 50 is contraction. So that's manufacturing PMI. And oil set for weekly decline. I think some of that has to do with Trump. He sort of, I wouldn't say threatened, but he told OPEC that they should decrease prices. He can say whatever he wants. He can say whatever he wants, and some of what he wants probably stick. It's not a bad way of doing it. Just spit out a lot of stuff out there, put a lot of stuff out there, and some of that stuff will stick. Okay, so we're not going to talk about Synlait right now. Let's have a look. I'll go back to the market today. Best performing sectors, discretionary. Discretionary. I wonder why that is. Up 1.87%. We did see I can think of one good discretionary retailer trading update, but I didn't think that sort of trading update would really move this part of the market. So I'm just going to open up discretionary just to see what's happening there. Maybe a little bit more bullishness in the retail sector. Let's have rank this by market cap. Wesfarmers had a really good day, so that definitely has helped because Wesfarmers is by far the biggest company. So Wesfarmers market cap 84 billion, Aristocrat 42 billion. Is Aristocrat really discretionary? I don't know. And then we have the Lottery Corporation. JB Hi-Fi share price is actually down, and a pretty good day for Harvey Norman as well. Premium Investments, Breville, Guzmani Gomez, Flight Setter. So pretty good day there. And yeah, the company I'm thinking of, which is KMD Brands, would be really small. It's probably not even on this list until we go to about, where would it be? I thought about 300, 400 million. I can't see it here at all. There it is. Oh, KMD Brands has a markup of 272. That's interesting. Anyway, so a pretty good day for discretionary. On the other side of the coin, a pretty negative day for energy. Again, oil is down. Bit of a slump with oil. In fact, let's have a look at oil prices. 74.4. I'm pretty sure they were at 80. Yeah, 80 not long ago. Interesting chart. Oil was looking bullish not that long ago. Now it's gone back to, who cares? And that's just me saying who cares about this chart. It's not really in an uptrend unless this is a buy the dip situation. Maybe it is. Maybe it is. But that's a problem with commodities. Sometimes you just don't know because there are other factors at play here. So that's oil down, and the energy sector is down 1.37%. We'll have a look at the ASX 20. Pretty good day there. Gold's down 1.18%. That makes sense. I did have a quick look at the best gainers and top losers, and I did notice quite a few gold companies in the top losers today. So that definitely makes sense. And the ASX 20, a pretty good day. I would say probably 15 companies up, 5 down. Oh, is that 3 days in a row? I've got this right. I should be an ASX 20 share price pickup. They should have a market for this. How many companies up, how many companies down each day? And I could win. Anyway, and you can notice, because actually this I was going to say this is linked by market, but it's not. It's alphabetical. If we have a look at the markup, well, we've still got the top 10 companies in the ASX 20 up. So the bigger companies are up, including Wesfarmers, the banks, BHP, Fortescue, and the biggest company in the ASX 20 that is down is actually Woodside Energy, down 1.92%. I'm going to have a quick look at Woodside Energy's chart just because I can. And yeah, it looked interesting and it's turning around. It looked like it was heading for a breakout, turning around. So again, even though people keep telling me Woodside Energy is more gas than, petroleum or oil, it's still affected. There is still a relationship between oil prices and Woodside Energy. And you can definitely see it there. Okay, so let's have a look at the top gainers today. And I'm trying to remember if I was surprised when I looked at this before. Not really. Ozquest, another pretty good day, up 25%. Oh, that's right. Ozquest was up, and the other company I mentioned yesterday, Hydrix, down. So two good days in a row for Ozquest. And what else do we have? Synlait Milk up 23.61%, stock of the day. Pointera, pretty good day for Pointera. Down yesterday. That could have been by the dip situation, but Pointera's chart definitely looking much better at this point in time. It's really gone. Look at the volume coming in. That's really promising for Pointera. I'd love to see the share price get above 10 cents and stay above 10 cents. Would I add to my position right now? No, because at this point in time, my position Pointera has increased significantly over the past month or so. The share price has more than doubled, and I'm pretty sure my holdings has now. Well, it's definitely more than doubled, but I'm trying to remember how much it is. It's quite high. So I don't think I want to add to my position Pointera. I just let it ride. That's what I'm going to do is just let it ride. I'm not going to take any profits at all. Just going to let it ride at this point in time. Okay, so that's Pointera. Another pretty good day for that company. Bubs, another good day after they released a positive Appendix 4C on, was it Tuesday or Wednesday? And let's have a look at their chart. Bubs, Australia. So it was Wednesday, yeah. So a good day for Bubs. And I was going to say nothing else here. Fertile's released their Appendix 5B, but turnover $126. I think we can move on. To the top gainers by market cap, BrainChip, Develop Global. I'm not going to complain about Develop Global. I did buy a position in Develop Global simply because the share price was at an interesting level. So there's me buying just above a support level of, I think that support level is about $1.90. So I bought just above that, expecting a bounce. We got the bounce. And then I took a closer look at the company and I was thinking, there is potential that this could go on a pretty big run over the next few years. And then we did have a moving average crossover in early January. And I was just thinking, this could go on a run. particularly if it breaks above 260. Pretty big down day yesterday, down 5.93%, but it's up 10.4%. So a little bit of volatility here for Developed Global. Not necessarily the best looking chart, but it does have a bit of promise. And the very fact I bought just near a support level means I'm more willing to hold this for, or just to see what happens in the future. So not willing to take profits just yet with Developed Global. Korea released their Appendix 14 not long ago. An okay result, I think. 40 Medical is on the rise. Let's have a look at 40 Medical because I can. And does this look interesting? Oh, it has potential. This is another one that has potential. This is definitely another one that has potential. 40 Medical. I might even put this onto my watch list. I have it on my watch list. I have this in one of my watch lists, but I'm going to put it into my watch list that I do look every single day. Not all my watch lists I look at every day, if that makes sense. Hopefully that makes sense. And a few other companies here. Somnomed released their Appendix 4C. Market likes it. I might have a quick look at that company. And Hillgrove Resources has bounced. I can't believe it. I was thinking it could be a good time to buy Hillgrove Resources, expecting a bit of a bounce, and we got that today. I did not add to my position in Hillgrove, and we've had the bounce, as I expected. Although the bounce is on low volume. You want to actually see the bounce on pretty good volume. This is like when the share price rises and then you see it pull back and it's fairly low volume. That's sort of the buy the dip situation. This is the reverse. This is sell the rally or dead cat bounce. Yeah. Anyway, let's have a look at top losers today. We'll see Kogan, not at the top here, but the next when we rank it by market. Actually, there it is there. Kogan down 14.55%. I will talk about Kogan because it is in my top 5 stocks today, coming in number 2, just behind Synlait. Interesting reaction from the market, although I can definitely understand why it has sold off, but there is a chance this is a slight overreaction from the market. I'll talk about why when we discuss, or I discuss Kogan later in the video. Other than that, there's Hydrix slipping after yesterday's good day. Yeah, and there's nothing else here. So let's have a look at top losers by market cap. And gold, as I said before, when I did have a look at top losers, I noticed there was a lot of gold companies in this particular list. In fact, the top 3 companies are gold companies: Westgold, Regis, and Coronado, all down by between 5 and 6%. And gold hasn't dropped. What's the Aussie dollar doing? Aussie dollar's on a bit of a tear. I was just wondering if it's the Aussie dollar more than gold prices. I expected gold prices to have a bit of a dip, and we haven't seen that dip. I'm not sure what's going on. Something must be going on there. Something must be going on. I'm just going to open up Capital Brief. Downgrades. Regis Westgold lead gold sell-off after downgrades. So not the gold price, just downgrades, according to this maybe. Gold miners Regis slumped on the ASX despite an uptick in global gold prices after both were stuck by downgrades by Canaccord Genuity. There you go. Okay, that's cleared up. I just expected gold prices to be down because we saw the gold sector down, but a few got downgrades. That's all it takes for a bit of selling in the gold sector. That's just weird for me. Again, if you do watch these videos, you know I just don't take any credence to any sort of downgrades or upgrades by brokers. I don't follow those at all because, as we saw with Visa, there was a downgrade one week. Next week, there was an upgrade. The share price rebounded. And you get that a lot. In fact, I would say broker updates, broker downgrades or upgrades are the weakest type of announcement that people react to. By far the weakest type of announcement that people react to. And I just don't understand it. In a way, I do. People just don't want to make up their own mind. They don't want to empower themselves to make decisions for themselves. They want to leave to other people so they can blame other people when it goes the wrong way. Anyway, I don't do that. I make my own decisions. I don't have anyone to blame except myself. Anyway, so gold had a pretty bad day. Kogan, we'll talk about that. And Findy down. Well, just have a quick look at the Findy chart. They made that acquisition, was it last week? Share price popped up. I'm not that convinced with this, again, with this announcement, and I had no problems not adding to my position in Findy. So I'm going to maintain. Actually, no, wait there. I've completely sold out. That's right. So I had no thoughts about actually trading or getting back into trading Findy at this point in time. Chart still looks pretty negative. And what else do we have? EZZ, good announcement yesterday, or Appendix 4C, just negative sentiments driving the share price down. And that is what happens. A lot of investors out there don't care if a company releases a good announcement. If they see the share price dropping, they have to get out, which is weird for me. It's weird that it happens, but it does happen. That's why EZZ is down. It's just, oh, they saw the rally and went, oh, I've got to get out now. I can get out now of this stock because the share price is dropping. And that's another reason why we saw a bit of selling yesterday, by the way. The Appendix 4C wasn't negative, definitely wasn't negative. If anything, it was positive, but it wasn't highly positive. They needed a really good positive announcement to get the share price back soaring up. Anyway, and that's about it. Okay, let's turn attention to the top 5 stocks of the day. There's 2 companies who released Appendix 4Cs that I did quite like. A company called BSA, share price up 5.6%. I have taken a position in this company, a longer-term position, not a trading position, although the chart doesn't look that bad. Has potential, even the chart has potential. I bought on the back of their Appendix 4C last quarter. I was looking out for this quarter, and I wanted to see the company maintaining operating cash flow positiveness, and they've done exactly that. By the way, the company has really low margins. They're into what do you call it? Infrastructure stuff. Fixed line and wireless telco services, smart metering services, and premium EV charging solutions. That's it. So fairly low margins within this space. So even though they have receipts for customers, 79 million, cash flow is fairly low, profits fairly low. But 2 good quarters of operating cash flow, not a lot of capital expenditure. So for the year to date, almost $8 million of operating cash flow. And with that cash flow, they're paying down debt, which is really good. I do like this. Yeah, so $8 million of debt repayments in the past half year, and debt now is down to, well, according to this, they've paid down all the debt. Yeah, because it says total financing facilities 16.5, unused financing facilities at quarter end 16.5. They've completely paid down their debt. That's even more exciting because that also means how much cash they have on hand. Let's have a look. I know a lot, only $2.2 million cash on hand. It's a fairly small company. It only has a market cap of 70 million or so. 74.67 million. I'm not going to show you the cash receipts history. It was down, now it's going back up. So it's not like that. The sort of cash receipts or revenue I like to see, which is going up through time. This is a little bit more lumpy, and I could definitely see that in this space. But I do think there is a bit of value when it comes to this company, particularly if they can generate $4 million of operating cash flow and free cash flow per quarter. So if you analyze that, $16 million of cash flow per year on a market cap of $75 million, and they're also growing their cash. So I do like the value of this company. I don't think the market has quite discovered it just yet. So I'm going back to my value days where I would buy companies where I saw good value. So this is one of those recent positions I've taken. And the other one was Somnomed, a company, well, I do have a long history with this one because I analyzed this company alongside Pro Medicus in 2012 or 13. And the reason I analyzed both companies at the same time because both companies had a similar market at that point in time. And I didn't take a position in either company. Am I regretting not taking a position in Pro Medicus at that point in time? No, I'm not regretting it. I don't believe in regrets. But I didn't take a position in Somnomed either. It could have been I took a position in Somnomed and not Pro Medicus, and that would have been, well. Anyway, so another operating cash flow positive quarter for Somnomed. I think slightly increase in cash receipts over time, but operating cash flow positive 1.5 million. They've made some mistakes in the past, probably about 5 years ago. They actually built stores or created stores in the United States and they closed that down or something like that. And last of all, let's have a look at the chart for Somnomed before we get to the top 5 stocks of the day. And, actually, chart doesn't look half bad. Couple of things. Look at the massive volume last March or April. That was sort of signifying near the bottom. And yeah, chart doesn't look half bad. Share price has gone up, has tripled since April. So definitely the trend has changed and sentiment in this company has changed. There you go. I actually didn't expect this one. Just shows you sometimes I don't look at the charts all the time. So this one hasn't popped up. I think this chart should have popped up. I'm not sure why it hasn't popped up. Anyway, let's get to the top 5 stocks of the day. We'll start off with either Michael Hill Jewelers or Michael Hill International or KMD Brands. Both companies released a trading update. Let's start with the negative one. Michael Hill International, always call them Michael Hill Jewelers. Share price down 3.7%. So not a big reaction from the market after at least their trading update. But again, trading updates are my favorite type of announcement. Well, after profit upgrades, they're my favorite type of announcements. You probably also say profit downgrades are my least favorite if I'm holding a company. But a trading update, I love these announcements because they can give us new information on how a company is performing. And that's exactly what the market is looking for, new information to drive the share price higher. So that's why I consider these the most powerful type of announcements, because they can move the share price. I wouldn't say move the share price. They could shift the sentiment in the company, so from negative to positive or vice versa, and they can lead to a breakout and a shift in trend as well. So I'm always looking at trading updates for that sort of opportunity. In fact, the stock of the day did exactly that. In fact, it was a very powerful announcement. That's why the share price is up. So 20 to 30%. Anyway, so let's have a look at this one. I'm also looking at any sort of commentary on the economy, which can be important. And I'm getting, at this point in time, I'm getting sort of mixed reactions or mixed signals from discretionary or retail companies. So a few weeks ago, we had Myers Holdings and Premium Investors release a bit of an update, and that was negative. And then I think the following day, we saw City Chic release a positive one, Baby Bunning release a positive one. We've seen Michael Hill release a negative one today, but at the same time, KMD Brands released a positive one. Anyway, so if I go straight into the sort of a commentary on the economics in like the first paragraph after the little introduction here, the prevailing macroeconomic pressures continue to impact consumer sentiment and discretionary retail trading conditions throughout 2024, with conditions in New Zealand particularly challenging. Then they go and talk about EBIT, group sales, gross margins, digital. Seems like digital was okay. That was probably the best sector. I think it was digital. Yeah, digital sales have continued to grow, supported by strong digital traffic and deployment of Bevel's Omni initiatives. Not Brevels, Bevels. They also mentioned group inventory levels remained well managed and are expected to be $5 million lower than last year. And yeah, so you can go through this yourself. The CEO of Michael Hill, which is not Michael Hill, it's Daniel Bracken, says, whilst we are disappointed with our overall sales result for the first half, or for the half, the business was comping record prior year sales in both October and November with 8 fewer stores. The flat sales for the half year reflected strong business performance in the first 3 months, offsetting the more challenging trading conditions at the beginning of the second quarter. So you probably could argue there are some positives here, also some negatives. And that's why the share price isn't down a lot. I thought it could have been down a little bit more. I did think it was negative or slightly negative. And I thought, if I thought it was slightly negative, the market would think it's negative and the share price would plunge. So I thought maybe between 5 and 10%. Maybe it was down a little bit more. No, it's near the low of the day. So let's have a look at the chart for Michael Hill International. I always want to say Michael Hill Jewelers because it's MHJ, which is Michael Hill Jewelers. I'm pretty sure they changed the name. And the chart, no, I have no interest in this. I was following this a little bit more closely during the month because it looked like the share price could break out above about 60 cents. And I was just waiting for it to break out. And if it was going to break out, I was hoping it would be on the back of a positive trading update. Unfortunately, we have not received that for Michael Hill Jewelers. Next company is KMD Brands, coming in at number 4. Share price up only 2%. I thought there could have been a better rally here. I thought maybe the market would see that KMD Brands is starting to turn things around. Trading update, New Zealand-based company. That's why it was released at 7:31 a.m. One of the first announcements of the day. Let's have a look. A little bit more positive, in my opinion. So they have this nice little table here, talking about quarter 1, August 24 to October 24, and then quarter 2, November 24 to December 24, or to date. And we do see quite a few positives there. So Rip Curl positive, Kathmandu positive, Oboz, which is shoes, negative, but group 1.7% increase in sales, and year to date negative. So it looks like there was a bit of a ramp up in sales during November into December, and I'm pretty sure they do mention that at some point here. Yeah, here we go. So the Michael Daly, who is the CEO and managing director, direct-to-consumer sales trends continue to improve for all three of our brands, while the wholesale market is taking longer to recover. We continue to focus on delivering positive sales growth, maximizing cash flows, and reducing inventory. So I did find some positives here when it comes to KMD brands, but I think there's probably wasn't enough oomph there. Probably wasn't enough positiveness there to really drive the share price higher for it to maybe break out. So let's have a look at the chart. Is there potential that KMD brands could break out? Oh, not, no, maybe. I think the bottom has been reached, and that bottom was in June at a share price of looks like about 32 cents. Share price currently 38, so not a lot above the low. We did see the share price rally back in, what's the month before August? July, August. Yeah, it was a nice little rally from 32 cents up to 54, and we haven't seen much happening since then. Yeah. And funny enough, the really big peak in volume was just before the bottom. So that can be a good sign that maybe the bottom is being reached when you see a bit of an increase in volume. Sometimes you actually see the increase in volume or the peak in volume coinciding identically with the low. Here you don't. There's a little bit of a displacement there. Anyway, so KMD brands, I thought it was a positive trading update. Did I actually mention macroeconomic conditions? I can't remember. I can't remember. Now, haven't really talked about any sort of economic conditions, which is one thing I like to see in these sort of trading updates, because a lot of times it is macroeconomic conditions which is dictating how the company is performing. A lot of initiatives by management can have a say, have a large bearing of how the company is performing, but macroeconomic conditions is really important as well. So that's KMD brands coming in number 4. Last night, actually, no, it was when I was recording the video. Michael Jewelers or International released their trading update last night, by the way. And when I was recording the video, Bioxyne released also a trading update. Revenue guidance. Funny enough, the share price is down today. But the share price did pop up when this revenue guidance was released. I'm not surprised people have been selling today, because there's nothing to take away from this apart from it's positive. We'll have a look at the chart, and I can definitely see why maybe some people are selling if I don't realize how positive this is. Now, it wasn't that long ago, the company released an addendum to presentation dated 18th of November. And I found something really weird in this. Things are moving along really well, but they maintained their revenue. Here it is. Near-term growth strategy had a target objective of exceeding revenue guidance of $20 million. And just based off the numbers, 6 months to date for the first half, they had $12.5 million of revenue. And I was thinking there is potential that the second half of the year will disappoint if they haven't changed their revenue guidance for the full year, because $12.5 million in the first half means $7.5 million in the second half. So I was thinking, maybe the next Appendix 4C or the next 2 Appendix 4Cs might really disappoint. So I was a little bit nervous because I'm trading this at this point in time. And then not 9 days later, they released a revenue upgrade. This is a revenue upgrade to revenue guidance for financial year 25, and they have raised it to $25 million. And this is positive. It's all positive. In fact, revenue for the first half was $12.6 million, so a little bit more than they expected. 267% increase on the previous half. The company achieved a record second quarter trading, continuing the outstanding results of its previous quarter one, on the back of several major contracts, growing customer base, and expanding product range. Now, this is on the back of Breathe Life Science, BLS. They made an acquisition of this company, I don't know, a few years ago. It has to do with medicinal marijuana, or just marijuana, that sort of thing. And it seems like, medicinal cannabis, that's what it's called. It seems like it's really performing quite well at this point in time. And so everything's moving in the right direction for Bioxyne. So let's have a look at the chart. So I'm a little bit surprised people are selling, because it was a pretty good announcement, but the share price has risen a fair bit Just take your time trading view. We're not in any rush. Oh, that's not the chart. Yeah, so I can't exactly remember on back of what I bought, but definitely around about July into August of last year, we started to see some positive things being released from this company. And then we had the breakout in the share price during August, moving average crossover. I bought just after that at 1.2 cents. And I was a little bit nervous, not nervous, but I limited my size of my first trade with this one, my initial partial, just because of where the share price is, 1.2 cents. I don't want to hold any companies whose share price is below 1 cent because you then get into the problems of pip traders. Share price did fall below 1 cent briefly in October, but it took 2 months from when I bought for the share price to really take off. So I bought 10th of September and the share price took off on towards late November. So it's on about 2 months. I was just holding this company and just waiting, being patient. And then the share price continues to go higher. Why am I not surprised a little bit selling today? Because the share price has increased a lot. And you will see profit taking. We'll see profit taking. Share price did increase 10.7% on pretty good volume because of this revenue upgrade. And today, probably just a little bit of profit taking. Yeah, it's probably just a little bit of profit taking. That's about it. And the volume today has been pretty good as well. Yeah, anything above about 4 million is pretty good volume for Bioxyne. Now, if Synlait Milk didn't release, well, no, that's a lie. I was going to say, if Synlait Milk didn't release their announcement, Bioxyne might have been the stock of the day, but I think Kogan would have been the stock of the day if Synlait Milk did not release their announcement. Talking about Kogan, coming in number 2, we have this company, share price down 14.55% on the back of a trading update. Well, they call it a business update, but it's the same sort of thing. This company does release quite a few business updates. And the most recent one before this probably would have been at their AGM. And I thought they released more trading updates than that. And there we are, business update in July. Oh, look at that. They released a business update just before August, or reporting season, or reporting month, and they've done it again. So maybe this is just what they do. They release a business update just before they release results. So we saw that in July, and we've seen that in January. Let's see how or why the market has not liked this one. And it comes back to Mighty Ape. Now, if you have a look at what's happening with the business overall, everything seems to be going along nicely. Gross sales up 10.3%, revenue grew 9.9%, gross profit up 18.3%, gross margins up by 2.8 basis points, or PP, percentage points, whatever they want to call that. Adjusted EBITDA up 17.5%. Adjusted EBIT grew 21.2%. But the main thing about a lot of trading updates is if you do have anything negative, the market will latch onto that. And it seems like that's what the market has done today. It's latched on the only negative thing here. And that negative thing has to do with Mighty Ape. Anyway, so they actually do have, talking about how good Mighty Ape is doing or something like that. And then they start off with the next sentence with, however, which is not a good way to start a sentence off after you're being positive. However, implementation and technology challenges temporarily, adversely, probably shouldn't have used those two words together, maybe, I don't know. Temporarily, adversely, I'm just saying that because two words that end in L-Y, sort of like two, what do you call them? Not adverbs, what do you call them? Impacted Mighty Ape sales and profitability during the peak period. The market doesn't want to see that or hear that. Temporarily adversely impacted Mighty Ape sales and profitability. These issues have since been largely resolved. The market doesn't hear that. The market doesn't care about that. They just went, oh my God, what's happening with Mighty Ape? Oh, we're going to have to sell. So I do think there is a potential that the market is slightly overreacting on this bit of news. In fact, if you have a look at Capital Brief, they do mention that somewhere. Kogan shares plunge on Mighty Ape profit warning, EBITDA miss. Or maybe there was an EBITDA miss as well. That could be another reason why the share price has dropped. If their guidance, or not the guidance, the previous guidance was missed, that could definitely lead to the share price dropping. I thought it was mostly based off Mighty Ape profit warning. So that's probably why. In fact, we can have a look at that, confirm. So EBITDA, although it's just at EBITDA, 25.3 million. So what we could do is go back to the AGM. I wonder if they do have a half-year guidance here. And then we can confirm why the market has sold off. If EBITDA is down from expectations, that could definitely anyway, so we've got trading there. What I'm looking for is any sort of guidance. I'm not seeing guidance. I just see an adjusted EBITDA for the financial year 24. And I'm not seeing any sort of guidance. Doesn't mean it's not there, but I just don't see any guidance. I would like to see any sort of guidance for, oh, you know what I could do? Just open up the announcement. Not the announcement, the article in Cover and Brief. Because sometimes they do mention how it is, City Analysis said Kogan's adjusted EBITDA increase of 17.5% to 25.3 million was a 7% miss to visible alpha consensus expectations. So it wasn't based off Kogan's expectations, it was based off analyst expectations, which is a little bit different, just slightly different. So that's probably why the share price has sold off. So it's just not Mighty Ape, although I do mention that it's a slight miss with adjusted EBITDA. And that's just analyst problem. Fault. Maybe not problem, fault. Okay, so Kogan, let's have a look at the chart. Interesting chart. Share price all over the place. I've always thought of Kogan as more of a trading stock. And you can probably see why if you just have a look at the daily chart. Share price is all over the place here. What's his name? Scott Phillips owns this company for the long term, but he should be trading it. I think he held it from all the way to the bottom in 2018, all the way to the top, and all the way back down. Definitely more of a trading stock than anything else right now. You just don't know which way the share price is going to go. I thought the chart was looking a little bit more promising before today, but today has probably ruined any positive sentiment I had and the market has in regards to Kogan. And finally, the stock of the day is Synlait milk. I will do a standalone video on this one. I think it's needed. Oh, probably, maybe not. I'm a little bit biased there because I have taken a trading position in Synlait milk at 44 cents. And I'll show you why I took a position at 44 cents when I do that standalone video. Company released a return to profitability with half-year 25 guidance provided, and it was a massive increase from previous guidance. In fact, this company withdrew their guidance, I'm thinking July. Today, yeah, Synlait financial year 24 guidance withdrawn. Yes, so their previous, actually, no, I'm going to talk about this in a standalone video. They withdrawn guidance, I'm just going to say right now, their withdrawn guidance was actually lower than the numbers they provided today, which is weird. So you would have expected the numbers to be much lower, but in fact, things have really turned around for this company, which is why the share price is up 28.17%. Anyway, so that's the stock of the day. Now, let's have a look at a few of your comments before I finish recording this video. Sensei says, I remember you saying you don't plan to have your own biological children, so who will get your stock portfolio and other wealth in your will, nieces, nephews, or will you leave it to an Australian? I am not planning on dying. I have no plans on dying. That's not in my agenda at all. I do plan on living forever. And it's going to be a bit of a bummer when the universe eventually expands to the point where everything just fades out of nothingness. But who knows, maybe we're in a simulation, but that would be a bummer to be the only thing alive when everything else fades away. I have no plans at this point in time. Who knows? If I have dogs, I'll leave all my money to the dogs to make sure they're well covered, well cared for, extremely well cared for. I don't really care about people. I'm sorry, I know people watching this, but there is 8 billion people on this planet. We do need to look after other animals anyway. Maybe not dogs. There's a lot of dogs as well. A lot of cats, yes. There's some species out there that have like 5 or 6 or 7 remaining left. Yeah, let's look after those species. Okay, map 0400V0. SPN 4C plus net cash plus quarters. Sparc? You're talking about Sparc? Sparc did release their Appendix 4C this morning, but this company is a storage stock. They have no cash flow. They have zero cash flow at this point in time. And this is the actual definition of a storage stock. They're selling nothing. Here it is, receipts, 0. They might have revenue. Maybe they're starting to sell something. It's one thing I don't really check because receipts and revenue are a little bit different. In fact, a company can be selling something and have revenue but have no receipts because they get the receipts. Maybe there's a 30, 60, 90-day receivables or something like that. But this company is still a storage stock. It's not selling anything. And when I see storage stocks releasing Appendix 4Cs, I just move on. I don't look at it at all, at the company at all. Appendix 4Cs and 5Bs are for companies that generate cash flow. That's the way I look at it. Nothing else. For Sparc Technologies, it's other announcements that are more important. For instance, mining exploring companies, I don't even bother thinking about Appendix 5Bs. It's their drilling results that are an important thing. It's not their Appendix 5B, it's their drilling results. So anyway, Sparc Technologies, net cash plus quarters. Oh, okay, I see what you're talking about here. I think I know what you're talking about. If you go to section 8, Section 8 is estimated cash available for future operating activities. What it does, it's a fairly, what's a good word? It's a very loose way of doing it because all they do is look at the cash burn in one quarter and then based off that, you're just going to burn through cash at a similar rate for the next few quarters. How much cash do you have on hand and do you have enough cash? And they assume if you have less than 2 quarters, you need to answer some questions about what you're dealing or how you're going to deal with the lack of cash. For Sparc, they have 5.31 quarters of cash remaining. Now, I don't know if I like this. Okay, this is where I do have problems. So they have no cash receipts. They burn through way more than $381,000 in operations. And the reason I say that is because they received $1.1 million in government grants and tax incentives. They don't receive that every quarter. In fact, I probably would say it comes in once a year, once a quarter. In my opinion, government grants and tax incentives don't belong in cash flows from operating. It belongs in financing activities. It's not part of operations. And it does give you distorted information. And this is a great example. It distorts Section 8 because they're saying they only burned through $381,000. It should be $1.4 million, and they have cash and cash equivalents at quarter end of $2 million. So they have to do a capital raising, and they don't have to answer Section 8.6 because it's distorted by government grants and tax incentives. So Sparc will have to do a capital raising based off what I'm looking at here. Very quick look at it. So, burn through. They're not operating cash flow. In fact, they say operating cash flow positive. I'm a little bit wrong here. In fact, they say they're operating cash flow positive. They're not. So they burn through $800,000 of cash. Let's go back to Section 8. I did some bad mathematics there. So $800,000 of cash. And that means they have 2.5 quarters left of cash. And, they wouldn't have to answer Section 8.6 because it's less than 2 quarters. Okay. I'm hoping that's what you're talking about, but thank you for that map. Thorley Photography, Alcidion looks like a steady uptrend. We should talk about it. MedAdvisor is heading for profitability. Why does the market hate it so much? Thanks for the video. Alcidion and MedAdvisor. Alcidion, let's have a look at the chart. Oh, this could be looking interesting. In fact, if we didn't see the share price really go on a little bit of a bender, or what's the opposite of a bender? A good bender, back in July and August, say if the share price didn't do that at all, share price stayed below, say, 6.5 cents, this chart will be looking even better because there will be shareholders who bought when the share price did go on this run who will want to get out, and there will be a bit of resistance. Again, I think Alcidion, very important in their Appendix 4C when they release that. I'll keep a close eye on it. And the reason behind that, this company always disappoints me when they release Appendix 4C. Here we go, their quarter 2 results. And so if you do want to have a look at this, they'll be releasing it on the 30th of January. So next Thursday. And this could be interesting. If it's a really good quarter, we could see a bit of a breakout for Alcidion. So keep your eye on Alcidion. I have to completely agree with Thorley Photography. I'm probably not there just yet for Alcidion, a company that has disappointed me for a while, but just because it's disappointed me in the past doesn't mean it will disappoint me in the future. And MedAdvisor did release something negative not that long ago. In fact, I'll have a look at the chart first. I can tell you exactly which day they released something disappointing. Was it the last Appendix 4C? Could have been. Yeah, it was the last Appendix 4C. 31st of October 2024, share price dropped 32.9%. It was a disappointing Appendix 4C, but this company's receipts and revenue is seasonal. And I was fully expecting this. And when I say fully expecting it, leading into it, I'm not so fully expecting it. But when it happens, I go, yeah, it's obvious. This company's revenue and receipts are seasonal. And I'll show you. If I can. I might not have it. I might not have MedAdvisor's chart here. Oh, it's pausing on me. Stop it. I'm easily frustrated when things don't work. I do have it. This is from a few quarters ago, I think. And it won't let me move it, which is annoying as well. Oh, I don't know what's happening. This happens a lot. Actually, no, this is from the last quarter. So this company receipts, you see a massive peak in the December quarter, which is the quarter we're in now, a massive peak. So that's what's happened the last 2 years. And then the following few quarters after that, we see receipts drop. And that's the exact pattern we've seen the last 2 years. So I do expect a really good quarter. I'm pretty sure they want to or are trying to smooth out the lumpiness. So I'm just looking at the chart and I'm thinking, this could be a really interesting play here because I think the market might be overreacting. Because if they do release a really good quarter and the cash receipts have gone bonkers, which they might do, if we go back to the last, for instance, so the quarterly update, this disappointed the market. I can't remember why. I don't have that good of a memory. They were operating cash flow negative. But if we go back to the December quarter last year, so here it is, quarterly update released on the 30th of January. They had $40 million of receipts and they were operating cash flow positive by a fairly big amount, $15.2 million. So there's a very important thing about this company. They are seasonal. So I wouldn't be surprised to see a massive increase in receipts for this quarter. And that could really turn around sentiment. So this is a possible play here. So I do agree with Thorley Photography. Why does the market hate it so much? It's just because of that quarter and just shifted sentiment from positive to negative. I still remember someone trying to get me to buy MedAdvisor during this uptrend. And I thought it was getting a little bit too highly valued. And I was also concerned about that lumpiness in revenue. And we're going into the worst quarters. And it's not surprising to me that the share price has dropped a fair bit. But I think this is a possible situation where the market has overreacted to both sides. When the share price was moving up, it overreacted. When the share price is dropping, it's overreacted again. I'm going to put it down as a possible buy in the anticipation of a pretty good quarter result. Thank you, Thorley Photography, for giving us that. And that's going to be it for this particular video because I've rambled on enough. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.